It's the beginning of a new month, and that means it is time for your piping hot monthly Bitcoin digest. As we often do, we are going to be covering a little bit of everything. We're going to start off with a little bit around macro, what is happening around the world, which I think is very interesting. We're going to talk about some of the regulatory clownery that is coming out. And then lastly, we are going to talk about some of the latest and greatest around Bitcoin technology, innovation, and tools. Without further ado, let's jump in. So building on what I covered in the last month's digest edition, it is fascinating to continue to see this narrative emerging around Bitcoin being this kind of flight to safety or this safe haven asset. This is very different than what we've been told time and time again, that, oh, Bitcoin is this risk-on asset. And I think if you look at a lot of historical data, that is certainly true, but it is interesting to take stock of what we're seeing of. Speaking of stocks, we can see that the correlation between Bitcoin and the S&P 500 has now flipped negative. So there is this divergence that's happening, right? And interestingly, you can see that this is not the first time that has happened. In fact, when it has happened previously, that tends to have preceded the ensuing bull run. So pretty interesting signal to see there. Looking outside of stocks, again, we've been told time and time again that, well, Bitcoin will just never survive a more normal interest rate regime. And yet, here we are. Bitcoin is up over 100% year to date when priced in the USD. And so one could argue, well, that's because the market is anticipating a pausing and reversal of the rate hikes and the injection of new liquidity. We saw that with the Bank Term Funding Program, which I've covered in prior videos earlier this year. But I think it's still pretty remarkable. Again, all the pundits said Bitcoin literally could not survive. And what we saw instead was a pretty normal price crash that has followed prior cycles as well. What's even crazier over this same year-to-date time frame is that long-term US government bonds are down 14%, as we can see. This is wild, especially as we see more wars, conflict. Where is the flight to safety that we've typically seen and that the mainstream media and political and financial elite would have you believe? In fact, as Dylan shows here, Bitcoin's actually close to an all-time high when priced in treasury bonds. We've also seen gold nearing its all-time high priced in USD. And yields on 10-year treasuries topped 5% in what looked like it was going to be the start of an avalanche. Now, to be fair, over the last couple days in particular, yields have pulled back rather sharply. We can also see that the 30-year over 2-year has uninverted, which perhaps could finally be this harbinger of people starting to flock back into long-dated bonds as a safety measure. And you can see again in this chart, when that uninverts, that's a pretty reliable predictor of a ensuing recession, which a lot of people, myself included, have been expecting for some time. So again, that's hot off the press even over these last few days. And so does that mean that perhaps things are changing? Perhaps Bitcoin isn't actually this sort of flight to safety. But I'm not so sure. If you've been following any of the news around Japan, they are in a world of hurt. We are finally starting to see the chickens coming home to roost as it relates to Japan's absolutely astronomical debt burden, which again is different from the US in many fundamental ways, which is why they've been able to kind of ride this thing out for so long. But at the end of the day, an unmanageable debt burden is an unmanageable debt burden. And so what Japan has been doing with yield curve control, i.e. suppressing interest rates, even while other jurisdictions have raised them, mechanically that requires them to print the yen in order to pull this off, which is devaluing the yen quite rapidly. And you're now starting to see, I've seen a number of posts from people in Japan that are now starting to say, you know what, I'm for the first time in a very long time really noticing increases in price, especially things like energy, gasoline, etc. And so in order to control the descent of the yen, the Bank of Japan is selling treasuries, right? So they're selling the treasuries to get dollars, and then they're using those dollars to buy the yen to, again, prop it up a little more than what would otherwise occur in order to sort of control and at least stem the descent of the yen, as it were, due to all the printing. And oh, by the way, Japan can do this for a long, long time. They have an absolutely enormous war chest. Again, remains to be seen, but this sort of carry trade that's happening with the Japanese yen looks like a really big deal. Hard to say where this leads, but despite the pullback in treasury yields we've seen over these last few days, one could easily imagine these other dynamics very much throwing a wrench into the hopes that those yields would come down and the price of these bonds would start to go back up. And again, regardless of the near-term dynamics, it seems to me that the cat is out of the bag, and more different types of entities are discovering the merits of Bitcoin as this decentralized, truly global, uncensorable, zero counterparty risk type asset that is extraordinarily unique. And so you've seen Mohamed El-Erian, you've seen Larry Fink, you've seen Julian Timmer from Fidelity, right? All of this narrative is around, look, like despite these sort of short-term blips, Bitcoin is increasingly looking like this attractive store of value, this relative safe haven versus government bonds that, guess what, aren't actually risk-free. So net, what does that mean for you and me? Well, I tend to agree with someone like Dylan LeClaire and others that are expecting some sort of significant pullback over the next, 3 to 6 months before we then truly launch into this next bull run. But I'm also not necessarily betting on that. And I think if you're not stacking sats, you are inviting these big institutions to just come in and grab all the Bitcoin, right? I think we are very close, if not there already. And in many ways, that's discouraging, right? In many ways, a lot of us would love to see lower prices for longer, so that we can continue to stack sats. But I just don't think that's realistic. And so I do think there is some urgency around trying to hit your stacking goal, between now and let's call it a year from now. Going hard in the paint, I think, is something we're going to look back at and be grateful that we did. But let's move on now to our next topic, which is some of the regulatory clownery that we've seen from none other than Elizabeth Warren. Surprise, surprise. Again, this next bit is a little bit US-centric, admittedly. But I do think in many cases we've seen some of this rhetoric that starts in the US start to propagate elsewhere or vice versa. And so basically what happened was that the Wall Street Journal ran a report citing blockchain data from Elliptic, making the claim that Hamas terrorists had raised all these millions and millions of dollars worth of crypto. So Elizabeth Warren sees this, gets 100 other legislators to sign some letter that goes to the White House and the Treasury that says, hey, look, see, we told you crypto's for money launderers and terrorists and all this and that. And so, interestingly enough, Elliptic actually published a blog where they outed her and said, as we can see, there is no evidence to support the assertion that Hamas has received significant volumes of crypto donations. Elliptic has engaged with the Wall Street Journal to correct misinterpretations of the level of crypto fundraising by Hamas. In addition, we have been in discussions with the office of Senator Warren to ensure that the relevant parties have a proper appreciation of the complexities and nuances of analyzing these wallets. So Elizabeth Warren, who claims she started her career to go after the banks, is now the bank's biggest mouthpiece, and who is now at this point pretty much single-handedly leading the crusade against Bitcoin in the US. And again, this will not just be a US phenomenon. You're going to see this rhetoric continue to unfold as these conflicts continue, which is that, terrorist groups are using this as a method of financing themselves. And so the Wall Street Journal very sheepishly kind of published a little correction, a little note that, oops, we got it completely wrong. And yet that seemingly hasn't stopped Senator Warren from continuing her clownery. And most recently, she is seen here citing various techniques that are allowing this illicit behavior to happen, one of which she includes is self-custody. Now, Elizabeth Warren, politicians, bureaucrats, parasites all around the world are never going to be able to ban math. And I don't think we would see any sort of self-custody ban in the near term. But we should remember history when the US made it illegal for citizens to hold gold back in the 1930s under threat of 10 years in prison. And so my challenge to you is to at least think about, what would you do in such a situation? I think it is absolutely critical that we all learn the skills of self-custody. We learn how to use Bitcoin privately. Yes, it is possible to use Bitcoin in a highly private way. And again, this is not to propagate illicit activity, but you simply have a right to privacy, and you certainly have a right to your own property. Self-custody is a must. Again, if you have your Bitcoin on exchanges, you have to get them off. And so I have a whole playlist on this channel, as you may be aware, of how to take self-custody, all sorts of different hardware wallet options, all sorts of different desktop wallet options, Samurai Wallet, Wasabi Wallet, different privacy techniques. So check out my channel content, because again, despite governments typically moving quite slowly, I personally think this type of regulation could be a gradually then suddenly type of thing as well, especially as institutions are piling in. While yes, all of this is probably going to be good for number go up, it is not necessarily a good thing for self-sovereignty of the individual. And so you have to take precautions, and you have to also think about, like, what would you do personally and with your family if there were to be such a threat to your ability to self-custody Bitcoin. If you're curious for what I'm doing, you can hit me up on Vida, and I'm happy to share some of what I'm thinking about for what admittedly I think is a tail risk, but a tail risk that should be considered seriously nonetheless. Now, as the final topic for today, let's move on to some of the happenings around Bitcoin tech and innovation. As I referenced in my prior edition of the Monthly Digest, I really do think it is somewhat of a renaissance when it comes to building on Bitcoin. I'm not saying everyone necessarily agrees with all the things that are being built or that are trying to be built, but it is extraordinary to see the absolute influx of developers coming back to Bitcoin or coming to Bitcoin for the very first time. And like it or not, a lot of this did get kicked off with ordinals earlier this year. Now, I have mixed thoughts around ordinals, as I've covered in prior videos, but like it or not, that has heralded a lot of other interesting developments. Notably, we saw BitVM come into the spotlight in October. BitVM is basically a virtual machine where you in theory could do whatever sort of arbitrary computation, and they have found a way to fit this virtual machine into Bitcoin in a way that doesn't disturb the base layer. This is very significant, right? The ability to do some of this stuff was always presumed to require some sort of a soft fork, which is always going to be contentious, etc. But at least thus far, BitVM appears to not require that, which is a humongous deal. And make sure you're subscribed. I'm going to do a deep dive video on BitVM and some of the different use cases this could support in the very near future. But it includes things that I think are going to be pretty universally valuable regardless of what type of Bitcoin user you are. This could include things like potentially supporting zero-knowledge rollups or different L2s on Bitcoin. And make no mistake, there are going to need to be a variety of L2s with all sorts of different trade-offs, some that are more focused on trust minimization, security, some that are going to be more focused on scalability. But for Bitcoin to grow to support the entire planet, make no mistake, that is going to be a requirement. And there's a lot of really cool zero-knowledge technology that can add compelling privacy benefits for users that I think would unambiguously be valuable for pretty much everyone. We also saw Blockstream formally launch their Greenlight Lightning as a Service capability. The reason this is so important is this enables other developers to add non-custodial Lightning to their apps. For those of you that are familiar with Breeze and what started out as the Breeze wallet, Breeze has gone on to create their SDK that actually uses Greenlight in the background. And so this is also a huge deal because the Lightning Network, rightly so, has received criticism in the past for being potentially too custodial, right? You look out at the level of activity, a lot of people out there are using custodial wallets. And again, there's nothing inherently wrong with that. People are free to make whatever decisions they want with their money, including trusting it with a custodian. But obviously, we would prefer to have robust, non-custodial methods for using the Lightning Network. I have covered all sorts of self-custodial Lightning wallets on this channel. I have showed you how to build a Lightning node from scratch. I have shown you how to run your own Lightning node, all that good stuff. But I'm more of a hobbyist. Maybe you are too. And so for businesses that want to start adding Lightning to their apps in the right way, i.e. making it non-custodial, Greenlight is now a terrific toolkit to enable that. And so if you're a developer, I would encourage you to check out their documentation. They have a free tier where you can get started just to sort of play around with it. But that is a very welcome addition to the Lightning ecosystem that I hope on balance will provide the tools for non-custodial Lightning usage to proliferate. Additionally, we saw the launch of the Taproot Assets protocol on mainnet. Taproot Assets, formerly known as Taro, is developed by Lightning Labs. And this is a protocol to make Bitcoin and the Lightning Network as well a multi-asset network. The ability to create stable coins that can be transferred using the existing network effect and liquidity of the Lightning Network, the ability to create collectibles. Again, many of you watching, I know, are not as fond of these types of use cases, but I very much see these as additional ladders that are being stacked up to the life raft that is Bitcoin, that some are going to use to stumble their way onto this remarkable thing that is Bitcoin. And so be sure you are subscribed, because at Jolts, which is my day job, it's a Bitcoin rewards and loyalty startup, we have been working on our Jolts wallet, which is going to be a non-custodial Bitcoin and eventually Lightning wallet that will also have support for Taproot Assets. If you want to play around and see what is possible with the protocol, we're going to be launching that very soon, and you can expect a video on that very, very soon. With all that, let's go ahead and conclude today's video. All right, so again, we got a little bit of everything this time. We got a little bit on the macro side, this fascinating narrative emerging around Bitcoin as this safe haven asset, this unconfiscatable, zero counterparty risk asset that is so unique. And it's digitally native. It's native to the internet. It can be transferred at the speed of light. Like, this is crazy. And it is increasingly the case that big institutions are waking up to this. And so for you and me, that underscores some degree of urgency. Again, we could see another big pullback to get even cheaper sats that we can stack. But I'm not necessarily holding my breath. And as we saw with Elizabeth Warren and all this nonsense around self-custody, it is critical that you learn the skills of how to take custody of your Bitcoin, how to use it in a private way. Again, I have a lot of content on this channel that can help you out. And if you're looking for a little bit more hand-holding, you can reach out to me now on Vida, and you can even schedule calls with me. We can walk through a particular problem you're facing, setting up multi-sig, setting up your own node, taking self-custody for the very first time, whatever the topic is, you can reach out to me, and I'm happy to walk you through things. And so admittedly, the world around us looks rather dark at the moment, but I think there is this immense beam of hope, and that is in the form of Bitcoin. But I'm curious to hear your thoughts. What do you think of any of the topics we've covered in today's video? Would you like to see any topics covered in deep dives in the future? Let me know in the comments down below. But I hope you found this valuable and insightful. If you did, you already know what to do. Give this video a like. Use the share feature underneath this video. That really does help get this to a broader audience. And I think it is increasingly dire that people are aware of what's happening and are acting accordingly. And if you are so enamored with this content, you want to donate to a pleb, which really does help me continue to make this content, you can do so in a number of ways. If you happen to be using something like GetAlby, the browser extension, you can just click that and it'll automatically detect you're watching my channel. You can also send sats to my Lightning address, me@www.ianmajor.xyz or ragermajor@getalby.com. But for now, my friends, we'll go ahead and leave this here. As a reminder, every sat counts. And until next time, I'll see you then.